Hopefully you're having a good day, guys. My name's Andy. My channel is Finding Value. If you like making a bunch of money, this is the channel for you. Click subscribe. Give me the thumbs up. Today I'm going to go over investment strategy. So you're a newer investor. You've never looked at an investment strategy. What the heck do you do? So I'm going to jump into this presentation and talk about an investment strategy. So having an investment strategy, you need to have an overall investment strategy. Your investment world will orient itself around this strategy when you invest and when you develop a strategy. You're going to start to seek out and study and notice things when you have a strategy for your investment, because you're going to be looking at the strategy a certain way, from a certain paradigm or perspective, depending on what strategy you implement. And I'll just go over what my investment journey and strategy is to give you an example of what mine is. I started doing the whole ETF diversification part in the beginning, but what happens is if you don't put in the work, you still have a bunch of dogs in your portfolio. And a lot of the investments are out of favor. So I dove into what drives stock valuation, what market conditions do and what value. So you really need to learn how to overweight and invest off of value and market conditions. That's really, if you understand those two things, that's what you can overweight certain sectors at certain times to really push the portfolio gains based off of the knowledge that you have on investment. Once you figure out the conditions and valuations, I think everything kind of falls into place. So my strategy is I developed an investment strategy based off of ratio investing. That's your value portion of it. And that just is comparing assets to other assets and comparing that to history to see which ones are the cheapest in the investment world. And then I look at market conditions, which is basically market timing to a certain extent. And assets get priced differently under certain market conditions, and that's what I've noticed. Those conditions are a byproduct of the real estate cycle, which sets inflation and interest rates. I position my investment to profit from those market conditions and how money rotates between sectors. I use the real estate cycle to gauge market conditions and ratios to identify value. That's basically what I use. And I use both precious metals and stock equities in my investing portfolio. I use those two things are major cornerstone of my portfolio. So this is the real estate cycle, and I'm just going to go over it briefly. It's got 4 stages. It has a recovery phase of the real estate cycle, an expansion phase, a hypersupply phase, and a recession phase. And each of these phases favors certain areas of investment. In the beginning of a recovery phase, it's best to be in real estate and stocks because typically you've got lower interest rates and low inflation during this time frame. So real estate and stocks do pretty well. When you enter into the later stages of a recovery phase and into an expansion phase, what you're going to notice is that inflation is going to start kicking up, and eventually you're going to see rising interest rates in an expansion phase. And typically in this phase, commodities, real estate, tips, they do pretty well. Anything that inflation, an inflation hedge or something that likes inflation is going to do very well. And when you hit the top and you go into a hypersupply phase, you're going to have high interest rates, high rates of inflation, and this is typically when you want to enter bonds. Because on the backside of a real estate cycle, it's deflationary when it crashes or pulls back. And that's going to bring down stocks and real estate. It's going to bring down commodities, and everything's going to kind of collapse down because it's deflationary. And that's when bonds are really good because you're going to be locked in at a higher interest rate. And the normal cycle for the market is that people are going to buy bonds as the market crashes and interest rates are going to fall. So you've kind of entered first. You have the high interest rates. You know what to look for in market conditions in terms of the real estate cycle here. And you were there before everyone else, and everyone's going to want your bonds during the recession. And here's the housing starts. And basically, this is just new privately owned housing starts. So this is just new homes being built in America. The average per year is 1,500,000 of units. So it's 1.5 million units per year. It's right around here. And all this is showing is it's just the real estate cycle going back and forth. That's all it is. It's recession going down, recovery, expansion, hyper supply phase, and then you go into recession, recovery, expansion. And it just goes over and over and over. Right now, we're entering an expansion phase. That's what we're about to enter because we underbuilt before this. And that's all I wanted to go over in this, is that we have valuations and market conditions, and that the real estate market is what drives those conditions. What's next is I'm going to go over investing mistakes that new investors can make while investing. And it is the strategy is absolutely important, and even value and market conditions. But you have to first you have to set up a strategy, and that strategy can be refined over time. But the strategy is going to allow you to focus on certain things in your investing. If your strategy is investing some of it in precious metals, you're going to have to understand what strategies there are to investing in precious metals. Then if you're going to do equities, you're going to have to understand what strategies there are for investing in equities. I'm going to release a whole bunch of different videos on all of these things to help you guys out in this series for new investors. I know I've been talking a lot about very high level, kind of higher end stuff on this channel, and this is going to give you the framework to build off of on this channel. So give me a thumbs up if you like this content, subscribe to the channel if you haven't done so, and thank you for listening. This is Finding Value.